Hello, this is Steve Malone with CompassFX. Hope you're doing well today and getting some good trades. I'm going to continue in my series on the secret of chart patterns. And if you didn't catch the first video I did in this series, let's go back over some basic information related to the secret of chart patterns. Hidden inside every chart is a story about where price has been and where it might go in the future. Some stories are obvious, while others are more difficult to figure out. Stories within a chart are told by a pattern of repeated formation of price movement. We refer to these as chart patterns. Now, chart patterns, all in all, have a completion rate of 65 to 85% of the time. So if we're able to read the chart pattern, read the story before us, inside that story there lies a secret as to where it is going with a high amount of probability. All in all, the secret of chart patterns is what's known as a measured move. A measured move is the calculated distance of two or more points in a chart pattern. The measured move is applied as a profit target after price breaks out of that chart pattern. And it's been said that proficient traders can often determine a logical profit target by simply calculating a measured movement of the chart pattern. So today what I want to do is to talk about the head and shoulders and the inverted head and shoulders. In the previous video we spoke about the trading range breakout. The head and shoulders is simply made up of three high peaks for a potential short setup. And we have a high peak, a higher high peak, and then a lower high peak. And what we're attempting to do is to identify these three peaks, and then what we want to look at is what's referred to as the neckline. With the first and the third peak, we're looking for the dip down or the trough. And this creates a low point. You can see these two low points right here. Now oftentimes what traders will do is they will draw a line between these low points, which will create a very low neckline. However, more often than not, if you take the average low, run that across, you're going to have a more favorable outcome when you take the measured move. Now what's the measured move? The measured move is simply looking at the average high or the average close on the high to the neckline. That's what the measured move is. And what we'll do is we'll take this measured move, and when we get the break here, the market starts making its move, we simply take that measured move, move it over, and set it below the neckline. And you can see how the market came right down to where the measured move indicated. Let's take a look at what it looks like in Synergy. You can see here on a dollar Swiss 4-hour chart, the market moved up, created a peak, fell back down, bounced back up, created a higher peak, came back down, created a lower low before pushing back up to attempt to see if it could get higher than the first peak. So here we have three high peaks, and the market then falls back over. Again, if I simply take the average highs to the average lows, this creates my measured move. And we can see here that the low points create that neckline. When the market breaks the neckline, we simply take our measured move, move it below the neckline, and you can see here that the market came down and settled right upon that measured movement. Let's take a look at the inverted head and shoulders. Now the inverted head and shoulders is a long trade setup because instead of looking for peaks, we're looking for what is oftentimes referred to as troughs, a low point, a reversal peak. It's just a low point, a lower low point or trough, and then another trough. Now let me share something with you. Sometimes an inverted head and shoulders will have a downward sloping neckline, suggesting that the market still wants to continue downward. This can oftentimes be a head fake because what's really setting up, even though the market appears like it wants to go down, it's really setting itself up to push higher. So what we want to do is to take the peaks of this trough and the peak of that trough right there, run the average highs on that to create the neckline, and then we look for the break. Again, we take the average lows, measure the average lows up to the neckline. That's our measure move. Take our measure move, set it on top of the neckline, and that will then indicate the potential target of where the market will go when we get a break of the neckline and a move back up. So again, the neckline, we prefer an upward sloping neckline, but oftentimes in an inverted head and shoulders, what we'll actually see in the marketplace is a downward sloping neckline, which can indicate potential weakness, and it's less reliable as a reversal signal, but look for this type of setup. And again, the measure move is simply taking the bottom of the middle trough, the average low there, and measuring it up to the neckline. Let's take a look at what it looks like in the Synergy model. In the Synergy model, we can see in this example that the market made a move down, created a low point, pushed up, created this peak, dropped down and made a lower low before pushing up and creating a higher peak. So we have two peaks sloping upward. This is a potential inverted head and shoulders setup. The market then makes a lower low than what it had back here, but notice this is a higher low than the first low. Another good indication of inverted head and shoulders pattern. The market moves up. Now we're looking for a break of the neckline here. Upon the break of the neckline, you'll notice that the measure movement from the average low to the neckline, we simply set that on top of the neckline, and that gives us our distance where you can see where the market actually moved right to that target and then faded back down. Now something I haven't spoke of as of yet is the initial stop loss. In the previous, you saw that in the head and shoulders pattern that you simply take that measure movement from the entry point and you set it in reverse, and that moves up and is the initial stop loss. Now sometimes what you may want to do is set your stop loss above this peak right here, but in this case the initial stop loss is above the average high of the peak. That's a good place to place it. In the case of the inverted head and shoulders, same scenario here. The measure move is simply put in reverse. It is lower than this low point, and so our initial stop loss here, pretty good spot for an inverted head and shoulders pattern. Well, this covers the head and shoulders and the inverted head and shoulders chart patterns when it comes to identifying the measure move. We're going to continue in this series. We're going to cover the double top and double bottoms along with triple tops and triple bottoms in the next video. Well folks, it's Dean Malone with CompassFX. I hope some of the information I've shared with you about measure moves and how to read the charts will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye bye.